Hello everyone, welcome back to the channel, and today we're going to be doing a trade recap video, and I'm going to be going over a trade that I took yesterday on MNQ. Okay, so I'm going to go over all of it so you guys can see what I was looking at and what made me take this trade. Okay, so the first thing I saw is that London wasn't moving too much. We had two inside bars and we had plenty of liquidity resting above and obviously below. We've got failure swings on both ends, and I'm just expecting price to take this liquidity just because it's closer to the targets. Okay, so I'm expecting price to take these liquidities and then move and then grab a piece of the pie down. As I've explained before, we're not looking to grab the whole move. We're not looking for a 400-point move. We're looking to grab a simple 2R. Our stops are tight. There's no problem in grabbing a 2R in a counter trend situation as long as you wait for the right alignments. Okay, so I hadn't done much at this point, but I've got my indicators and I get alerts in case I miss anything. Okay, so as the 7 a.m. candle opens, it moves down and sweeps the 4-hour low. Okay, it sweeps the 4-hour low and creates this IFEG. But that, first of all, that IFEG is too small for me to take a reversal trade from, and I need extra confluence if I'm taking a reversal trade. So as soon as we sweep the 4-hour low, I don't want to be taking a reversal trade. I want to see what the market has to offer me. If I need to grab a continuation later, I will grab a continuation later, but I'm not going to risk my capital on the first IFEG that is made after sweeping a previous 4-hour low. Okay, so even though it looks like it's making the bottom wick, in the next candle we can see that it closes with a wick. I'm doubting of this. I don't know if it's created the bottom wick or it's going to continue to extend lower. This candle is fairly bearish. It's created a big wick. At this point, I'm not sure, so I'll sit out, and if I need to grab a continuation, I will, but I'm not risking my capital on this. We see that we continue lower, we expand, and now we failed to test the value area low. So now I'm looking at this and I see that now we displace with aggression. We have an IFEG, a CIST, and now I'm interested. Now I want to go long. I put my stops underneath the low. I will either target the point of control or the value area high. Stops just above the low. In this case, I put my TP at the value area high and I waited to see the reaction at the point of control. And I would usually target the value area at the point of control if it's at least a 2R. So usually I would take it out there, but seeing as we had all those swing points above, and I really thought we would break them, I thought I would be greedy if I held them all the way up here, already having a 3.1R in the books. But I did think that maybe taking this high or the value area high would be a good call, to be fair. Why leave profits on the table? I would obviously manage my position when I was up 2R and at the point of control. So I let this play out. We initially come into drawdown, which I didn't like because there was a new 50-minute candle opening and I thought this candle was going to close bullish. we would have a bullish 50-minute, bearish 50-minute fair value gap there, and we would most likely tap it. But I did hesitate a bit here because it was sort of bouncing around between closing as a candle 2 or closing as a bearish candle. And anyway, I was already in the trade, so I let it play out. Okay, so the new oak candle opens, it creates a little wick and pushes up to the 50-minute gap. At this point, I'm being cautious because I don't want to see a bad reaction of this 50-minute gap. But as I said, there was plenty of liquidity above. This looks like a pullback and not an actual reversal. So I was fairly comfortable in this trade, although I was taking precaution. Okay, so we pull up. And at this point, when we start rejecting, once we hit the 1 hour, I am break even. So at this point, I'm break even in the markets and I'm risk free. I'm just watching the trade play out. We eventually get to the 2R and we're rejecting the point of control. So right now I'm hesitating whether to take out my profits or leave them, because I usually take them out at 2R, but seeing that we have so much room above us and so many failure swings, I'm really thinking that they're going to be taken. So I just held it a bit and I said if I see too much bearish aggression, then I will take out. We're reacting off this fair value gap, so I am thinking if we close within this fair value gap, I'm going to take out my profits to at least get something out of the markets because I've been greedy. But we do push up. We're rejecting this gap. And now my confidence starts to grow. And I think if we don't come back to that gap, we're good to go. Okay, so now we start pushing. Here we consolidate a bit around point of control. As I explained in my lessons, that is normal. But when price is trading with its fair value, I did say that price tends to move from the value area low to the point of control, to the value area high, to the point of control, and so on until it breaks out one side. So I did hold this trade, pushed up. Once we pushed up there, I was trading my stops to 1R. And then we get a massive push up. We get a massive push up, and we take the highs. So that was the trade. And I'll catch you in the next one.